conspiracy anymore. Jack Sermon said it, and he's, the guy that runs the Silver Eagle program. So if mints become inefficient or start doing things in a self-serving manner, if the mints around the world say, you know what, let's take care of our people in Australia and UK and South Africa and Austria instead of sending it to the United States, like that, you can shut the light off on supply, man. And it's true. That's it. That's how fast it happens. And that's why, when I sit here for 6 months telling everyone how cheap everything is and how abundant it is, in the back of my head, I hear people saying, yeah, right. Guy's just trying to talk his book. No, I'm not.
In today's news recap, silver soars as gold hits yet another record high. Precious metal prices stormed higher yesterday as investors flocked to safe places to store their money amid uncertainty over the U.S. election and tensions in the Middle East. Gold hit a record high of $2,740 an ounce, and silver topped $34 an ounce for the first time since 2012. Gold has risen more than 30% this year, while silver is up 43%. The rise in precious metal prices has been driven by expectations of further interest rate cuts by central banks around the world, as well as worries about the U.S. election result and conflict in the Middle East. The U.S. Federal Reserve and the Bank of England are widely expected to cut rates again early next month, while the European Central Bank did so last week. The People's Bank of China has also got in on the act, cutting rates yesterday in a bid to revive the world's second largest economy. Lower interest rates tend to boost the gold price because it becomes relatively more attractive to investors. Bullion is also seen as a safe asset in uncertain times. With 2 weeks to go until polling day, the U.S. election looks to be on a knife edge, while investors are also nervous about developments in the Middle East. The outlook for gold is quite bullish, said Joni Teves, a strategist at UBS, who is tipping it to hit $3,000 next year. He added, there are a lot of risks around the next few weeks with the U.S. election coming up. We could be in for some choppy price action. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
It doesn't come from companies like mine or Money Metals or SD or JM it doesn't. It comes from the handful of primary distributors, which are the market makers. So if you're a market maker and you're spending hundreds of millions of dollars on product from the UK mint, from the Australian mint, from the US mint, from the Canadian mint, all these mint, and business is normal. If it's slow, they get hammered when the back dates are going for less than the current issues are, and they have to buy the current issues when no one wants them because they can buy cheaper on the back date. So go to a position where, like we've seen over the last several years, where everything's disappearing and the mints are out of product. Sorry, nothing for 2 months for you guys. So the primary distributors say, well, if we're running out of supply and we have more demand than we have supply, better jack up the premium because we're not going to get anything for 2 months. I don't blame them. That's what business is. Well, we have to pass that on at the same time. If we're paying more money to buy them from the primary distributors, for the one or two people that decide to sell, yeah, they'll get a much higher premium on the sell side. Just understand, this is not a magic number. This is a number that is based off supply demand in a forward-thinking way. Yeah, getting products shut off for a month and a half, and things are crazy. Premiums are going to jack up, and when it sells out, good luck getting product because no one goes back into dollars. Why would they? The secondary market becomes absent of any product. The primary distributors are out of product. The mints aren't making anything for 6 weeks. That's how it happens. And during the pandemic, they were the model of inefficiency. You want to talk conspiracy? I would urge everyone to watch Bixweir's 3-part video with Jack Sermon from the U.S. Mint, where Jack, who developed the Eagle program since '86, said he was told by his superiors to only print as many or mint as many silver eagles as would not create a public outcry. Well, the outcry got so loud, in large part due to all of us yelling in Bix's interview. Who knows what happened to that guy, but he said it, blew me away. He said, the primary distributors came to us second half of the year, asked for 36 million. We only gave them 12. The law says they have to make as many silver eagles as is demanded by the public. They broke the law willingly, knowingly. Why? Are they stockpiling silver because they know it's strategic, not industrial? Are they stockpiling because they know we've exhausted our own stockpile? But when you hear these things, you know, take off your tinfoil hat. It's not conspiracy anymore. Jack Sermon said it, and he's, the guy that runs the Silver Eagle program. So if mints become inefficient or start doing things in a self-serving manner, if the mints around the world say, you know what, let's take care of our people in Australia and UK and South Africa and Austria instead of sending it to the United States, like that, you can shut the light off on supply, man. And it's true. That's it. That's how fast it happens. And that's why, when I sit here for 6 months telling everyone how cheap everything is and how abundant it is, in the back of my head, I hear people saying, yeah, right. Guy's just trying to talk his book. No, I'm not. And Dunnigan, you've been with me long enough to know that I'm sincere on that. And you've seen both sides of that coin.
Mm-hmm.
I think the setup is far greater than anything we saw during the pandemic, because the setup right now comes along with an awakening of that elephant. You and I and everyone watching this, were the pimple on the elephant's back. The elephant will wake up when a big bank gets bailed in or gated, or something happens that none of us even have on a radar screen, God forbid. But I do think it's the time to realize that this may be the best value that we've had in a long, long time, because who knows what tomorrow brings. And I can't imagine this being a peaceful transition or a peaceful election. I just can't. So I guess we'll see. I hope I'm wrong, but that would translate into difficulty for everyone, including the dealers, getting product at a reasonable rate in a reasonable amount of time.
In today's news recap, why silver ETFs are soaring and outperforming gold. Silver prices rallied and topped $34 per ounce, the highest level since October 2012. Falling interest rates and safe haven demand are driving the price higher. Additionally, increased industrial demand and supply deficit conditions are providing silver an edge over gold. The white metal is up 35% so far this year, outperforming gains of 19% for the S&P 500 and 26% for gold. Silver miners also spiked, as they are the biggest beneficiaries of a surge in silver prices. These act as leverage plays on underlying metal prices and thus tend to experience more gains than their bullion cousins in a rising metal market. Central banks around the world, including the Federal Reserve and European Central Bank, have been cutting interest rates to combat slow economic growth. After holding the rates at a 23-year high for 14 consecutive months since July 2023, the Fed kicked off the new rate cycle era by initiating a 50 basis point cut in interest rates last month. This marked the first rate cut since 2020. The central bank projects 2 more rate cuts of 50 basis points in its final 2 meetings this year, due in November and December. It also indicates another 100 basis points rate cut next year and a 50 basis points cut in 2026, which means 4 rate cuts in 2025 and 2 in 2026. Meanwhile, the ECB cut interest rate for the 3rd time this year as inflation risks in the European Union subsided faster than expected. The central bank lowered the deposit rate by a further 25 basis points at its October meeting. A lower interest rate environment raises demand for silver, as precious metals do not pay interest, making them appealing compared to alternative investments like bonds. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
It's real. It's very real. And we used to talk about, you and I, the little man, and the little man is always last to get the information. I would say a lot of these larger orders that we're experiencing, it used to be, please don't take this the wrong way, all of you, have an order minimum. During the pandemic, every online company did. We didn't. And there'll be people that will tell you that I talked with them for a half hour and they wanted to buy 5 ounces of silver. Now, that's not the greatest use of time, you could argue, but I don't care. I mean, I've built a business on treating everyone equally. So this is not saying that we don't want smaller orders. We want every order and help everyone we can. But I will tell you that it used to be you'd get a couple 7-figure orders a year, and we're getting several a week. And I'm not used to that. That to me indicates that there are people who have been listening and acquiescing to their advisors forever who are finally saying, I'm done. I don't care. I've worked my whole life to leave something to my kids,
Mm-hmm.
and I don't like what I see. I'd rather take my chances, and they're pulling out. I have noticed it, and I look at that as an indicator of what's to come next because it starts up at the commercial banks, excuse me, the central banks, the top of the food chain in terms of information. They're the most well informed and the most well financed, and it trickles down into people who have more money. For people who had an easier time making money than it is for them at this point to consider keeping it. And I think it's no longer about making money. It's about transitioning, passing it on, safeguarding it. And when you look to what is traditionally safe, like treasuries or banks, these are people that are paying really close attention, and maybe they have a stronger interest in doing so. And I guess I don't even know how logical it is what I'm saying, other than to say it's something that I've completely noticed. Very, very big orders coming from, including people who we've done business with before, but many we never have, and trying to take matters into their own hands. So I would say that would be the next thing in line. Would be the public wakes up, but they wake up a little bit too late. This is why so few people ever succeed in investing. Ask Rick Rule. He'll tell you the most money he ever made is when no one wanted to buy the stuff. But he had the information and the intuition and the research and the due diligence to say, no, this is right. And this is why I always say, trust your gut, because the conventional wisdom will always say, no, you do that. Gold doesn't pay any interest and blah, 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 yet it's outperformed everything. I think you trust your gut. It's your best financial advisor. And we are in deeply, deeply submerged in uncharted waters. There is nothing like you can use to as precedent to where we are. There's similarities, but nothing like where we are. So act on your gut. Don't be that person that says, damn it, I knew I should have done that. I just let it slip by. Why didn't I do it? He talked me out of it. She talked me out of it. Just, you know, trust your gut.
What are your thoughts on Andy Schectman's interview? Do you agree with his predictions? Do you think the BRICS nations could challenge the US dollar and disrupt the American economy? Could gold really blow up in 2025? Drop your honest opinions in the comments and let the stacker community know if you're investing in miners or prefer sticking with physical metals. Thanks for watching. Don't forget to check out this video over here. I'm sure you'll enjoy it. I'll see you on the other side.